Hey folks, and welcome back to another video on this channel. So as you can see by the title, today we are going to be backtesting the delivery model that I had introduced you to in a previous video on this channel. It is the model that I consistently use on a daily basis. It is my primary model. I don't trade anything other than that. And it is extremely successful for me. Keep in mind that just because it is successful for me does not mean it will be for you, right? But in today's video, I wanted to go into replay mode. Even though I don't condone it, I don't like using replay mode because a lot of these other YouTubers or gurus are using the replay mode to fool people. It is cherry picked, and that I don't want. I don't condone it, but for the sake of this video, I'm going to use it. And what I'm going to do is to make sure you guys believe and understand that this is not cherry picked. I'm going to do it like this. And then I'm just going to place it here. So you guys know this is not anything that I've looked at prior. So we'll jump to the hourly time frame here, and then we'll wait for it to hit anything, right? We'll wait for PDA rate to get hit. As you can see right here, we hit a fair value gap 1, 2, 3 times. Let's go and see if there was a setup anywhere. Let's see, the first time it hit it, there was no setup really. There was an inverse here that you could have taken right here. Could have taken it here, down to this low here. Would have been okay, not the best. Let's see here. Okay, so this setup, there wasn't a lot, I don't think. It ran off too fast without us. Actually, there is a play right here. So what we have here is an inversion fair value gap. Let's delete this, you get the point. So we are delivering from an hourly gap, right? And right here, we have an inversion fair value gap that gets closed by this candle, right? This candle closes below it, and then this candle comes back up into it, but closes outside of it, right? Respects it a lot. But that would have been your entry, this candle right here. Either stop above the high here, or your stop can be mental when using inversion fair value gaps or just a fair value gap. What I sometimes do if I don't have a clear stop loss is that my stop loss is mental. I get out of the trade as soon as we close outside the inversion fair value gap. So as soon as we violate it, like invalidate it, then I'm out, okay? But as you can see, this would have played out perfectly. You could have either targeted this right here, this internal low, or this one, or even this one, right? That would have played out very, very well. But yeah, let's go back to the hourly, look for something else. Sorry about that. Let's see here. Now, keep in mind that it's impossible when backtesting like this to have a daily bias, which makes it a bit difficult. Let's see here. So right here, we did not. Wait for fair value gap to form. There is one right here that we could wait for. See us hit it. There we go. We hit it there to the tick. We go back in time so we don't cheat. We jump to the 2-minute. We hit it there. Let's look for a play. There's one right here already. Right? We have an inversion fair value gap right here. Right? Either you put your stop above here. Personally, this stop would have been way too far away for me to even place a stop on this trade. So on this specific trade, what I would have done is that I would have had a mental stop loss, right? If this candle, if any candle would have closed outside of the inversion fair value gap up here, I would have been out, because then that inversion fair value gap is invalidated and my idea is invalidated, right? Then it becomes gambling.
And I'm down $300. Yeah, I'm down 26,000.
Because if my idea is invalidated, why the fuck am I in a trade? I'm just in a trade praying it goes in my favor, right? And that's not how I trade. So this is how it would have looked. This is a mental stop, right? So let's just do it like that. I would have probably targeted that swing low right there. Either that or this right here. But for the sake of this video, let's target this. Use this as a partial point or a break-even point, and then let's see. As you can see, we hit take profit very, very fast. And it is such a high win rate model because you have that high time frame confirmation, right? So that is why I enjoy it so much, because high time frame PD arrays generally 90% of the time make some sort of pullback, especially if the PD array aligns with your bias or the drawn liquidity. Then there's no way we don't make a pullback on a PD array on higher time frames. And an hourly pullback can be very, very massive on a 2-minute chart, right? Because all of these candles right here is not even one candle on the hourly, right? So, and a pullback on the hourly could be 1 or 2 candles. So that's why I really, really enjoy this model. But let's keep going. Let's see if we could do anything here. Okay, we tapped into it again. We could look for one more setup on that same fair value gap here. Let's see if we find one. And we do, in fact, find one right here. Again, we hit the same fair value gap. This is the exact same setup on the exact same fair value gap. We inverse this fair value gap, right? We enter here with a mental stop or a stop above here, right? This would have been a mental stop, and there's no way I'm targeting this. So what I would do is I would do this, and that lines up perfectly with this fair value gap right here, which would have hit, right? That's what I taught you in the video, what you can use for your targets. If there's no clear target, either you could have used this low right here as your target, right? Or you could have used the equilibrium PD array. I teach this, right? And ICT does too. This is obviously something that he has taught me, that PD arrays in premium are always valid targets for your trades. As you can see, we hit premium and we went back up, right? It is so obvious as there is an algorithm, right? So because I don't want to hold all the way down here, that's way too far from out. I don't trade that way. I would use this fair value gap right here. I'd probably use the start of it or just at equilibrium right here, and it would have hit, right? As you can see, same fair value gap, same exact setup. We hit that hourly fair value gap, we inverse this, and we entry off of that inverse. Very simple, right? So let's do a few more. Let's see if we could get anything going here. I would ideally want to see us hit this. And look for something. Let's see if we get anything here. Okay, here we go. This is on a 2-minute chart. Let's see. There's nothing on the 2-minute. Let's look at the 3. There's nothing. 4. There's nothing. Plus, as soon as this internal high gets taken, I am no longer interested in placing my trade, right? Because this is taken, I am no longer interested in placing any trades. I want to place all my entries before we take internal structure, right? So let's see if we can go to the 1 minute. We can, and there was a play, right? Right here, we hit that fair value gap that I marked out. We have a 1 minute fair value gap right here that played out perfectly, right? And then your trade would have looked something like this. Because we're on the 1 minute, I'm fine with a stop like this. And then you would obviously target the high I just mentioned right there, and you would have hit take profit fairly fast. So I hope you understand this model. And when I said 90% win rate, I am seriously not joking. I'm not lying. I'm not trying to get views. I'm not trying to get anything. I am trying to be real, and I'm trying to help you guys out as much as possible. And that is why I am publishing my model, and I'm trying to teach you guys how it works. And in the next video is going to be a very, very strict rule set linked to that specific model, so you know exactly when you need to take a trade and when you need to, sit back and watch and don't place a trade, right? Because there are certain rules connected to this model, some a little bit more specific than I mentioned here. So I'm going to make an entire video on that, but I just wanted to quickly show you how powerful this model is if traded correctly. I mentioned in my original video where I taught you this model that you needed a market structure shift, and as you can see, most of these trades have not had a market structure shift, and that is because I personally don't need a market structure shift, especially when trading inverse fair value gaps, right? That is my market structure shift. If we inverse a fair value gap, that to me gives me a signal that okay, we are violating this lower time frame PD array and we're respecting this higher time frame PD array. We are probably headed in that direction of where the violation happened. So when trading inverse fair value gaps, if we violate the inverse that I want to take, that is enough for me. I don't need a market structure shift. But right here, as you can see, we did get a market structure shift here anyway. So this would have been a very, very valid trade. But most of my trades are executed based upon inverse fair value gaps. And I will also make a video on how to use them properly. So I hope you enjoyed. I just figured that since a lot of other people are doing this, where they go into replay mode and show you their stuff, I just wanted to do that too. But I want you to really understand that none of this is cherry picked. What you have just seen, this was completely taken, out of context. I just threw in a random date and then you saw it, right? So I hope you enjoyed. I hope you got a little bit better understanding of how I utilize this model. And again, if you have any suggestions towards me or my content creation, please just leave a comment down below. It would help me out as well. It will help you out too. So if you have any suggestions regarding how I can teach you any better, or if you have any topics that you would like me to go over, you could also drop that down below and I will consider making a video on it. So until I see you next time, I hope you take care. Bye-bye.